Hey y'all, it's your girl Patricia Petit and I'm back with another chart markup video. I'm gonna be showing supply and demand yet again, but with sales. I'm gonna show y'all a couple of trades that I took, why I took it, the steps that I follow with supply and demand. As you may know already, or if you don't know, I've been day trading for about 8 months now. Sometime in February will make 8 months. And I've been trading NAS100 this whole time, and I've also been using supply and demand to enter my trades. This entire time, I have not switched it up. I have not tried anything else. I've just stuck to what I know. And I really, truly believe that that is one of the reasons why I was able to make it this far, like as far as I've made it. But yeah, so that's mainly what I've been trading. And then I also trade gold here and there. It's like on my list, but I don't really trade it unless it's like, I don't know, because when I'm not looking for gold or thinking about gold, I won't even go look at the charts. But if I do think about gold, I'll go look at it and just see what's up with it. Not really make it a thing to take a trade. Now, sometimes if I do see gold is playing out a A+ trade, then it's like, okay, do I want to enter? But as of lately, I've been completely like blowing my personal live account that I start with $300. I've been completely blowing it on gold as of lately. Obviously, it's my fault because for one, I'm over trading, but I also just don't have enough leverage to trade gold. But I think the main thing was how much I was putting in on a trade. I was putting the normal amount that I would put on a normal trade with NAS100. Not with gold. Like, I wasn't calculating my risk properly at all. So I told myself no gold trades until I'm after my buffer is built on my personal live account. I will not be taking a gold trade. But I do love gold because high reward, but then you just have to remember high risk as well. And don't get me wrong, I wasn't losing any of those trades because the trade went against me. I blew my personal live account twice, and it was because of gold trades. And it was never because the setup was going against me. Never. The setup always worked out. I just had too much on the trade to the point where my account could not take that risk. My account couldn't afford it. So it would go all the way into that zone as much as possible, take me out, and then it will reverse and go up. It hurts so much because it's just like, really? Really? It felt like the market said, oh, Patricia Petit has entered the trade. She does not have enough in her account. Take her out. Take her out. Like, that's what it was giving. But yeah, anyway, so I mainly trade NAS100, and gold is on my watch list, but I don't really trade it as often. And I did start with some prop firm accounts, and I was using Top Step, but I ended up going over to being fully on my live personal account, which I love because I just took a trade for $1,000 yesterday. I was able to withdraw from that profit the same day. That's a different type of feeling. That's a different type of feeling. That's all I gotta say. There are 4 steps that I follow with supply and demand when I am looking for a trade. And the first step is to find the trend. Did he just fart? Did he just fart? He just farted. Ew. So when I'm looking for a trend, that basically just means I'm trying to see if it is going up or if it's going down. Are we looking for buys or are we looking for sales? Are we looking for demands or are we looking for supplies? That's what I mean by find the trend. Once you figure that out, the second step is for it to make a new high or a new low depending on what you found out about the trend. So when you're looking at the charts and you're trying to figure out the trend, you're basically trying to figure out if it's making higher highs or if it's making lower lows or if it's making higher lows or if it's making lower highs. Like, looking for that on your charts while looking at the higher time frames is going to help you find your trend every single time. I personally look at the daily, 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, and then finally 5 minutes what I trade on. But I'm not gonna lie, sometimes I look at the 1 minute if I'm trying to figure out what's going on with a candle. Like, if the candle is either looking one indecisive or it's giving like it's about to reverse or something, I look at the 1 minute to see how many specific candles are building this 5 minute candle that I'm in on, if that makes sense. Say I'm in a trade and my 5 minute candle is open and I go to the 1 minute, I'm looking at how the next 5 candles are closing because those next 5 candles make up my 1 5 minute candle. So that's why sometimes I look at the 1 minute, but I don't do that often at all. Like I said, find the trend. Step 2, make a new high or a new low depending on what you found out about the trend. If you found out that we are in a bullish market and that we are trending up and we're making higher highs, then you're looking for demands and you're looking for it to make a new high for that second step. Now, if you found the trend and you found that we are in a bearish trend and that we are going down, we're making lower lows, then you are looking for supplies. So once you figure out the trend, you figure out if you're looking for higher highs or lower lows to be broken based on the trend. And then step 3, we needed to come back and retest that zone. So if you're looking for demands and it goes up, make that new high, comes back down, we needed to retest that same demand that it had that big push from. And same thing for supplies. He's just all up in my video. And same things for supplies. If it goes down and it makes that new low, wherever that last green candle was, we needed to come back and tap that same zone, because that's the same, that green candle is the same zone where a big push to the downside was made. So we're waiting for the candles to go down, make a new low, and come back and retest that zone so that we can enter the trade. And the reason we're waiting for the candles to come back and retest these zones is because, like I said, these zones had a powerful move and a powerful push from that specific price area. Like, it had a great reaction from that area. So we basically wanted to come back up and do the same thing again, but make a new low, hopefully. Because our TP is always for the most recent high, but sometimes a little bit above it, because we're expecting the trend to keep trending and for it to keep making new highs. So that's why sometimes my TP is like right above the new high. But now that I've told you the steps that I take, let me show you on the chart. So this is a trade that I actually did not take today, but I kind of like paper traded it, but I didn't trade it mainly because the trade happened around like 1:30, and I stopped trading like after 11 for real. I do that because I was taking a trade at like almost 12 or 12 o'clock before. But once we get to 12 the afternoon, I'm not trading no more. So I did not take this trade for that specific reason, but it does not take away from how good this trade was and how it played out and how it followed all my rules. So first step, like I said, find the trend. So if you're looking at the market just on the 5 minutes, I mean, you can see that we've been making lower lows. And what a lower low is, a lower low. So, okay, so let's just say we're looking at the charts, right? This low has been created. Let's pretend that none of this is here. This low has been created, right? That's a low. Now, when the candles came up and came down and broke this level right here, it created a lower low. That's what that is. So this is a low, this is a lower low. When I'm looking for my trend, I'm trying to see what's happening. Is it making lower lows or is it making higher highs? Which this is considered a higher high compared to this high. So just the overall look at the 5-minute trend, I mean, you can see that we are slowly but surely going down. We're making some pullbacks, but we're making lower lows. We're not necessarily making any higher highs. Now, it came back up right here, but this was just a little pullback for it to continue going down. So when I was looking at the charts and I looked at my daily, which was red, as you can see, my 4 hours also red, 2 hour red. This is all I'm checking, y'all. Y'all be wanting me to explain my chart analysis like when I go down the daily time frames. I'm literally just looking to see what color the candle is. That's it, and that's all. And just to explain it a little better, I'm looking to make it a little bit easier. Sometimes I mark up this daily candle just to make sure that I am looking at the candles that are forming into this daily candle. I do not want to trade what was happening on yesterday's daily candle. I want to make sure that I'm looking at the trend for this 24 hours that we're in now, not the other 24 hours. So sometimes to make it easier, I mark up this daily candle top and wick, just so when I am going down the higher time frames, I can see the candles that are forming that daily candle. So as you can see, we were on the daily candle. Now we went down to the 4 hour. There's more candles there. But if you can see, we're making lower lows. We're failing to make higher highs. So go down to the 2 hour. Same thing. You see lower lows happening, but you don't see higher highs happening. You see like a little bit right here, but overall, you don't see this high being broken. We're failing to make a new high, basically. Down to the 1 hour. same thing. And then also, so this is where that daily candle started because this is where I marked it up. So I'm only looking at this and forward, nothing behind it. So, I mean, as you can see, this is a high, this is a lower high. It's not a higher high because it's not a new high compared to this. So lower high is just another confirmation for sales and going down. Lower low, another confirmation for sales and going down. Now I go to my 30 minutes, same thing. You see, like there's a mini trend right here, just breaking lows, breaking lows, breaking lows. So then we get down all the way down to our 15 minutes. We just got more candles just confirming it. And we get down to our 5 minute. Here we are. So at this point in my brain, I know that I'm looking for sales. Period, point blank. Now I just needed to follow all the rules that I have set to confirm that we are going to continue going down. I know what we were doing while this daily candle opened. I know what we were doing for the last couple of hours that the candle has been open. Now I got to make sure that we're still doing it. So we get on the charts, right? It's a consolidating a little bit. But then it starts to break lower lows. You can see it. This low is a lower low compared to this low. This low is a lower low compared to this low. This low is a lower low compared to this low. First step, find the trend. We just did that. Second step, we needed to go down and make a new low and activate our most recent supply. So my idea with this trade was that it's having a hard time going up, as you can see, consolidating a bit. But we do keep making new lows. So I know that the sellers are 100% in, but it does seem like the buyers are trying. So my whole idea was, okay, I think that it's going to try to come and take out this low. Why I thought that? I can't 100% give you a reason on why I thought that, but just from watching the market and watching the charts, I can kind of read a little bit in a sense when the market is coming to take out lower lows or when it's coming to take out higher highs. So in my head, I'm thinking, yes, we are going down, and yes, the buyers might be trying to step in. However, I think it's going to try to come and break this low before it goes up. So, I mean, as you can see, we was getting close to it. Oh, this is why I thought that. This is why I thought that. When I'm trading and I'm going down my time frame, I'm also keeping in mind and looking for any demands or supplies that it could possibly reacting off of in those higher time frames. So when I was looking at the daily, I'm noticing that we do have a demand right here. I'm not trading this. No. I just want to know this so that if I end up getting into a trade around this area in the 5 minutes and it starts to reverse and go up instead of go down, it's probably because it's respecting this demand that's on the daily. So these are things that I'm wanting to always be on the lookout for as I'm going down my time chart. Me marking up that demand on the higher time frame is me just reminding myself to be aware of a reversal, be aware of rejection, be aware of anything like that during this time of the market. So when I mark up this demand, this on the on the daily time frame, and then I go down to the 5 minute, I'm knowing that if I do get in a trade and I'm not out yet by TP1 or TP2 or I'm trailing or something, that it can possibly react off of this demand right here. So in my head, I'm thinking, okay, it's possible that it's gonna try to come down and take out this low, make a new low, and then do whatever it wants to do. So I'm looking at the charts right here and I'm seeing that obviously it's making lower lows. So obviously we're in for sales, but I'm also being cautious because we got some demands while we're coming up over here. This made a new high compared to these ones. So technically these are demands that could get a reaction off of them. So as it's doing all this, I'm just being aware of all the cautions. I'm being aware of all the signals that it's giving me, right? So it's coming down and it's disrespecting these demands. So I'm like, okay, the sellers are really in there like swimwear. You ain't got to tell me more than that. So now, like I said, step 1, we found the trend. Step 2, make a new low. So I was looking at the charts while this is happening, right? We got our green candle, next candle, green, next candle, red. Cairo, this man didn't hit his head on the... So I'm watching it play out. I'm waiting for it to make a new low. I think I actually looked at the charts around like right here. So I was waiting for it to come down and take out this low right here. So it did that with this candle. It made a lower, this is a lower low compared to this candle. So that activated the most recent supply. Technically, the most recent supply would be this green candle right here. I think I got on the charts like around this times, around these candles right here. So at this point, I'm waiting for it to make a new low compared to this low. So then this candle comes and it takes out this low. Now this is our most recent low, and that is part of step 2. So it came down and it made this new low, which then activated our most recent supply. So I marked up this green candle because this is our most recent supply. And now I'm waiting for step 3 to happen, is basically for it to come back and retap my zone. So the next candle forms, it comes up, it rejects. We love that. That is great confirmation that the sellers are defending that zone. So it rejects, it doesn't even close in the zone, which to me is an A+ setup. So you could have entered here, aggressive entry. That's one of the 3 types of entries. You could have entered here on an aggressive entry. Oh, and because like I said, I was paper trading this. So as this was happening, I was waiting for the next candle to open, right? The next candle opened and it closes red. You could have entered here. This is a conservative entry, the second type of entry. So you could have entered on this candle when it tapped. You could have entered conservative on this candle when it closed, or I don't know if y'all see it, but when this candle came down, it actually made a new low compared to this low and activated yet another supply. So it activated this supply. So you could have gotten into this position a couple of different ways, for real, for real. You could have gotten in aggressive on this tap of the supply or conservative on this tap of the supply. And then you could have added positions to this trade. So once it reacted off of this supply the way that it did, it closed red but also made a new low, because it closing red is the confirmation that you need for a conservative entry, right? We're waiting for that second candle after the candle that tapped to close the color that we're thinking that it's going. So that's a conservative entry, and you entering the trade if you are entering on more of a conservative type of entry. So if it's confirming your conservative entry and making a new low, activating a new supply, you can add to that position. You can open a new position. You can, there's just so many possibilities with the trade. Oh, and then the third type of entry would have been break of the candle. So break of this red candle right here. Third entry would have been right here. This is where I entered. This is where I entered at. So I actually entered when it came back up and tapped, and then it flipped and just went. You couldn't have gotten to this trade conservative at all. You would have had to enter this trade aggressive. So when I was looking at the charts, I put the green and red thing on there as if I was entering the trade, and it went crazy. Now, this was not a trade that you were supposed to hold on to, because as you can see, this is what happened after. And it started to go up. But you can see that, oh, and I forgot that candle came back down, but after this, it starts to go back up. But you can see that the red candle came all the way down here. So TP2 smacked. Say you entered like where I entered right here, TP2 right here. So if you would have gotten to that trade aggressive, you would have hit TP. And honestly, if you would have waited for it to come back up and retap, that's another way you can add in positions when it's coming back to retest your zone. But sometimes it's not the best idea, because it could be coming back to retest your zone because it's weak and it wants to continue going down, or, you know, invalidate that zone. However, one of the best ways or timing to enter a trade, retracing before it continues to go the way that you're thinking it's gonna go, or before it continues to go the way that you are in the trade for, or when it comes back and retaps your zone and then rejects, and you know, that's another entry right there. Those are mostly the times when I'm entering a trade, or in situations like this where you could have entered on a conservative entry. If I entered early and I know that I would have normally entered conservative, I'll add a position on a conservative entry just so the entry still makes sense. So hopefully that makes sense on how to scale in, because I know a couple people was asking those questions as well. But yeah, so step 1, find the trend. Step 2, make a new high or a new low depending on what the trend is. While it's making that new high or new low, it's activating that most recent supply demand. And then step 3 is enter. You figure out how you want to enter. aggressive, conservative, or break of the candle. And that's it. You set TP and you set stop loss and you walk away. This was a great trade. And like I said, I didn't take the trade and I don't even feel like I missed out. I'm just glad that I was even able to catch it and even paper trade it, even though it wasn't me winning real money. This was a great setup. It did cause for an aggressive entry. However, if you were paying attention to the charts and paying attention to it making the new zones, you could have gotten in a couple times. You could have scaled in a couple times. You could have gotten in conservative. You could have gotten in break of the candle. You could have used all three types of entries to enter that trade. Even if it was on that last candle, it would have just had to been an aggressive entry for that last zone. But for the zone that was before that last zone, you could have used all three entry types. So yeah, that's what I look for when I am getting up and I'm looking at the charts and I am entering a trade. I have rules that I have set in place, and if it does not follow the rules, if the market disrespects my rules, if the market disrespects my zones, if it's failing to make new highs and new lows and it's consolidating, supply and demand will not be used and I will not be trading. Period, point blank. So hopefully that made sense, and I hope that me scaling into trades and just how I enter trades made sense to y'all, and hopefully I answered some questions. And if you guys have more questions, please feel free to drop the questions down in the comments. But if you like this video, make sure y'all like, subscribe, and comment, and share it with other people. But I hope y'all had a great trading week. Continue to make that money. Once you make that money, do not let the market take it back, and just remember that discipline is what's gonna make you profitable. Following your rules is what's gonna make you profitable. Not following them is just gonna make you keep blowing accounts. Stick to your rules and only enter a trade if the market is fully 100% following your rules. If it's not following your rules, it does not deserve an entry out of you. Not every candle needs your entry. So again, I hope y'all enjoyed this video. Make sure y'all like, comment, and subscribe to your girl. Let me know if y'all have any questions, and I hope y'all have a great day. Bye, y'all.